Evening, friends. Hope I'm audible to all of you. Audible, and my video is also going perfectly fine to all of you. We will definitely start 7:30 sharp. I'm ready. I'm just waiting that all the participants can join in. And then we will start with important changes effective from 1st of October 2023. So I welcome all my friends like Suryam, Amit Kumar Jain, Ugon Roy, Anuj Jain. Many participants has joined, and lot are joining. We got more than 1,800 registration done today. So I'm sure today's webinar going to be very successful. So you can also cross-check your system, internet connectivity, sometime problem at your end and you start sounding, you can't see me. So you can cross-check your internet connectivity, audio and video both together. Thank you, Pankaj ji. Bharat Patel ji, good evening. So I'm thanking all my friends who are joining today. So just wait for 1 or 2 minutes more and we will start accordingly. So before I start, let me ask some question to all of you. Because GST is so happening and so many changes so frequently. It's very difficult nowadays to catch hold of changes which is coming out. And even GST Council is making recommendation one after another and sometimes creating more conflicting and confusion rather than providing clarity. But by the way, what is your take on the matter? Just simple question. GST almost 6 years plus. We all thought of GST to make it good and services tax. So what is your take? Are you really finding GST good and simple tax? Please. So you're not finding GST good and simple tax. Oh, I'm sorry. I'm sorry. None is writing that yes. Okay, I got one. Narendra Pal is saying something. Santanu said yes. I feel GST has given new lease of life. Srinivas is saying so. So of course we are getting many no, but very less yes. Okay. All right, so GST is a complex version, a lot of you. All right. Lallan Kumar Jha is saying he wants to understand GST now after 6.5 years. Babab is saying new litigation area, GST not good but very interesting. That is what Satish ji is saying. Anil Kumar is saying no but very interesting. Okay, Anuj is now saying GST become naughty boy. New ways to explore daily. Srinivas is saying so. Ashok Jha, GST is very confusing. Even officers are confused. Yes, reality as on date. But nevertheless, we have to carry on and continue. Avinandan is saying sapne अच्छे देखे but उतने के बाद पता चला कि सपने देख रहे थे. Okay. Vinod is saying okay. So he is appreciating. Good evening, Vinod ji. GST is life for changes. All right. So if you all are ready, shall I start? We are sharp at 7:30 now. If you say yes, I will start immediately so that we can finish off today's webinar by 9 o'clock. But by the way, you can take your dinner plate in front of you. You can start taking your dinner slowly and enjoy the webinar. There will not be any PowerPoint presentation, but I'm making it sure that you will understand my presentation in a very layman and lucid manner. So I will try my best. So you enjoy, take a cup of tea or coffee, enjoy your tea or coffee, or take your dinner, whatever convenient, but be comfortable. So relaxed, calm, cool down. That is the reason we have chosen this time, 7:30 in the evening, so that you are back from your office, hectic schedule. I know that being a working day, you are coming with hard work since the day, since morning to evening. But now you can relax, enjoy. And I will try to make it more simpler. I will not put technical jargon in my presentation. I will not put lot many interpretation also in my presentation. I will try to make it very, very simple, and will try to give a lot of value addition. Whatever best possible from my side, I will definitely try so that you can digest and accordingly use in your GST practice or GST compliances when you are looking after your company's books of accounts. So let's start with the changes. Today's webinar is importantly on effective changes, which is now made from 1st of October 2023. We are standing on 9th of October, but we must know that what all changes are being introduced, what is the implication, and what we should do for future compliances, looking at the changes which we are going to discuss today. I'm going to pick up all important changes which is being proposed by Finance Bill 2023, which is now Finance Act 2023, and also got notified that all these sections which I'm going to discuss today, effective from 1st of October 2023. Hope all of you are ready now and we can take it forward. So let's start with the very first change. You know that composition dealer having aggregate turnover up to 1.5 crore, that is the threshold for opting for composition dealer. He was not allowed to supply goods through e-commerce operator. But now changes is being made. Composition dealer is now allowed to make intra-state supply of goods through e-commerce operator. So when I say intra-state supply of goods through e-commerce operator, then it is inherent, sometimes looks like this composition dealer is not benefited because we do lot many interstate supply, but that is how this provision all about. Can I ask quick question to all of you? Within the provision, you can always find the answer, whether it is permissible for interstate supply of goods for a composition dealer, leave e-commerce operator, say yes and no in a chat box. So you can use yes and no in chat box. He can't do interstate supply of goods. And not allowed even for through e-commerce operator. Next question to all of you, whether supply of services through e-commerce operator is permitted, say yes or no. We are talking about intra-state supply of goods only, not the services. So a lot of compliances need to be done. There should be enrollment number, and then composition dealer can undertake intra-state supply of goods through e-commerce operator. Having said that, now come back to the next important change. Next important change. Second proviso and third proviso of section 16 subsection 2, which is pertaining to when recipient fails to make payment to the supplier within 180 days. Then recipient need to reverse credit, right? It is known to all of us. What is the change brought in? Listen very carefully. Earlier, this provision was adding this reversal towards my output tax liability earlier. This reversal was added to my output tax liability along with interest. Now, this is being amended in second proviso and third proviso under section 16, subsection 2. Now, hereby, recipient buyer fails to make payment within 180 days from the date of invoice, value and tax both together, then he can reverse credit as against added to output tax liability. Along with interest, and for interest, my submission to all of you, interest is leviable only when this credit, which can be alleged as wrongly availed because of non-payment within 180 days. But not leviable, interest is not leviable unless utilized. If you have utilized the credit, then of course interest is leviable and rate of interest would be, and I want to know from you, 18% or 24%. You can write down the answer in a chat box. I can see and I can correct accordingly. 18% from July 1, 2017, even from retrospective date. So when you're reversing credit, you need to capture this amount in table 4B2 of GSTR 3B when you're reversing credit, because then it is reclaimable. So whenever you make the payment, you can re-avail the credit. So for re-availing credit, my next question to all of you, with a time limit as per section 16, subsection 4 is applicable. Say yes and no in a chat box. Not applicable. Time limit is not applicable for re-availment. So you can show this particular amount in table 4B2 of GSTR 3B. And whenever you are re-availing this credit, you would be re-availing in table 4A5 of GSTR 3B with the simultaneous disclosure in table 4D1 of GSTR 3B. Hope this part is clear. Now here I want to clarify, which is not the part of provision change, but you must know that this recipient need not require to reverse credit for non-payment within 180 days in these following given situation. When there is RCM liability paid by recipient, Schedule 1 transaction deemed supply without consideration, no reversal. To the extent of part payment made, no reversal required, only to the portion not paid. To that extent, reversal would be required. And whenever transaction pertaining to valuation, section 15, subsection 2, clause B, FOC supply by the recipient to the supplier. In that case, this consideration part is not going to play for the reversal of credit. Or if there is force majeure clause in the contract, and because of that, recipient fails to pay, in my humble submission, need not require to reverse ITC. If there's extended credit term, let's say for 365 days, I know that there are two different schools, two different views, but I'm asking each one of you. If I decide being supplier and you as my buyer, that credit term would be 365 days. So it is crossing 180 days. Can we say recipient fails to pay? Fails to pay. When we both agreed, there would be extended credit term, 365 days. Do reversal required in this particular transaction? There are two different interpretations, but my humble submission, then we can always argue before the court of law that recipient is not failing because it is agreed with extended credit term, but of course litigation is going on. So this was the second change. Coming to the third change. Schedule 3 you are aware of. They are specified 8 entry, neither a supply of goods nor supply of services. Para 7 and para 8A and 8B. What is this para 7? Para 7 was merchant trading, supply of goods from a non-taxable territory, say Korea, to other non-taxable territories, say USA. You are registered in India, but you are undertaking supply of goods from Korea to US, which is not coming in India, and transaction happening from Korea to US. Para 7, merchant trading. Schedule 3 transaction, neither a supply of goods nor supply of services. Para 8A, supply of warehoused goods. So when you are importing, you have warehoused your goods in custom bonded warehouse. And when it is being supplied before any home consumption, clearance before home consumption. So sometime when it is within custom bonded warehouse, you are selling it. So this transaction is again being considered para 8A, schedule 3, neither a supply of goods nor supply of services. Para 8B is high seas sale. When goods are on high seas, it is being sold before entering in custom frontier of India. No GST leviable. And this amendment was done on 1st of February 2019. What happened this year in Finance Act 2023? We have seen that the field information, the field formation, the department at a lower level disputing the transaction prior to 1st February 2019. And they were issuing a so-called notice. And we have seen in many transactions, they have collected the tax even on these transactions, these 3 transactions. Fortunate part that para 7 and para 8A and 8B of schedule 3 now being notified retrospectively from July 1, 2017. No GST, being neither a supply of goods nor supply of services. But another condition is being stated in this particular change. If you have paid the tax because of your wrong perception, or you just wanted to avoid department litigation, you have paid the tax. Now it is being stated it's a schedule 3 transaction from July 1, 2017. If you have paid the taxes, can you go for refund? I'm asking you. Can you go for refund? Say yes or no in a chat box. Can you go for refund? Provision is saying you can't go for refund. But in my humble submission, this tax was not leviable at all. Whether it was amended from 1st February 2019 or now it is retrospectively from July 1, 2017. Ultimately, these 3 transaction tax was not leviable. If some taxable person has paid the tax wrongly, then that will be considered without authority of law. So if this tax is being paid, which is without authority of law, is being corrected by the department, then in my humble submission, we can always demand refund of the same, because it is Article 265 clearly saying no taxes should be collected without authority of law. Please, you need to be careful about, and that is what in my humble submission. Hope this part is very, very clear. another component pertaining to this transaction. I'm asking you question first, then I will explain the change which has been brought. These three transactions are out of GST, no GST leviable. But let's say there are certain common input services like rent, mobile. You can talk about certain common input services, internet, audit, lot many things. On your outward, you have not paid the tax because Schedule 3 transaction. Can you avail credit, common input tax credit pertaining to these three transactions? Say yes or no in a chat box. Possible. Say yes and no. It was possible. It was possible. I'm saying was possible. Now there is change. Explanation. Section 17, subsection 3, which talks about value of exempt supplies. Earlier, it was including only para 5 of Schedule 3, which is sale of land and building. Now they have included para 8A, which is supply of warehouse goods. Before clearance for the home consumption. So if supply of goods within custom bonded warehouse is now going to be considered as a part of exempt supplies and need to be added in the value of exempt supplies for reversal of Rule 42 and Rule 43. Input and input services 42, capital goods Rule 43, only para 8A. Para 7, which is merchant trading, Korea to US and high sea sale, still out of exempt supplies, meaning thereby on these two transactions, credit would be available except para 8A. And it is effective from 1st October 2023, meaning thereby prior to 1st October 2023, department cannot demand, I'm saying cannot demand, reversal of common ITC pertaining to all Schedule 3 transactions except para 5, sale of land and building. But from 1st October 2023, they can demand reversal of common ITC on para 5 and para 8A of Schedule 3, effective from 1st October 2023. Hope I'm clear to all of you. Say yes in a chat box that this part is clear. Say yes in a chat box that this part is clear. All right. Now let's move. Pertaining to corporate social responsibility. If any goods or services purchased for CSR mandated under Section 135 of Companies Act 2013, statutorily mandated, we got divergent advance ruling, some judgment in our favor, some judgment are against. Under Income Tax Act, it was disallowed, but in GST, there was dispute whether credit of GST on goods and services used for CSR would be available or not available. Section 17, subsection 5, clause FA introduced, which is prospective clause from 1st October 2023, meaning thereby now you will not get GST credit on goods or services used for CSR mandated under Section 135 of Companies Act 2013, but it is prospective one. In my humble submission, prior to 1st October 2023, department cannot demand reversal of ITC because this restriction, which is being introduced by prospective clause, cannot be applied retrospectively. That is my submission. Hope you all got it. Say yes in the chat box that it is clear to all of you. Say yes in a chat box that this part is very clear to all of you. Perfect. All right. Next. Section 23, subsection 2 is very, very important. And listen very carefully. Section 23, subsection 2. Before I start, section 23, subsection 2, let me tell you what is 23. Section 22, subsection 1, you know, threshold aggregate turnover for registration. 23, subsection 1 is saying that if you are exclusively engaged in supply of exempted goods or services, nil-rated goods or services, or non-taxable supplies, then you need not require to take registration. Exclusively engaged. An agriculturist, 23 subsection 1, you need not require to take GST registration, irrespective of any amount. Section 24 talks about compulsory registration. Like for RCM, if you're liable under RCM, you need to take compulsory registration. So 24 lists down certain transaction for which there is compulsory registration irrespective of any threshold amount. Now listen what is the change which is being brought by Finance Act 2023. It is retrospectively applicable, first of all, from July 1, 2017. Retrospectively. 23 subsection 2. Notwithstanding anything contained in section 22 subsection 1 or section 24. So overriding 22 subsection 1 and overriding section 24. And saying that the specified person can be exempted from taking GST registration if they are being notified by way of notification on the recommendation of GST Council. Simple meaning that 23 subsection 2 retrospectively applicable from July 1, 2017, overriding 22 subsection 1 and 24 saying if you are a class of person who are exempted from registration by way of notification issued, then you need not require to take registration. So what are those categories? Some of the example. Let's say I'm a supplier and I got 2 crore rupees my outward supply, but my whole supply is subject to RCM. Recipient will pay GST under reverse charge. This particular class is being exempted for taking registration. So my outward subject to RCM, and this specified person is being excluded by way of notification. Lot of chartered accountant, right? We do intra-state and interstate supply of services. For interstate, compulsory registration under section 24, right? Even though my turnover is less than 20 lakh rupees, I'm asking a question, you answer me. I'm a chartered accountant, my turnover is only 12 lakh rupees. But I'm engaged in interstate supply of services, Delhi to Tamil Nadu. It is less than 20 lakh. But I'm engaged in interstate supply. As per provision, I must take GST registration under section 24. But 23 subsection 2 with retrospective amendment is giving power that they can always exclude specified class and any supplier of service, including chartered accountant, engage in intra and interstate supply of service, but having turnover aggregate turnover not exceeding 20 lakh rupees, then he need not require to take registration. That is the specific notification made applicable from 13th of October 2017. Hope I'm clear to all of you. You say yes in a chat box that this part you're understanding what I'm conveying to all of you. You're understanding all these parts. Anyone who is engaged in handicraft goods, having turnover not exceeding 20 lakh rupees, exempted. That is what the meaning of 23 subsection 2. Hope this part is clear. Now coming to the next change. We have seen in GST era that GST registration is getting cancelled by proper officer, and so frequently they are cancelling. Section 29 subsection 2 is giving power in the hands of proper officer to initiate cancellation of GST registration, and they have specified number of situation like violation of provision under CGST Act and rules made thereunder for composition dealer and registered dealer, regular one. If they are not filing their return for continuously for specified time period, voluntary registration taken, but you're not commencing your business within 6 months, or registration obtained by means of fraud. These are the situations where proper officer may cancel your GST registration. So when GST registration is being cancelled, you're having another option under section 30 for moving revocation application under section 30. And time period was specified only 30 days, which is now amended by way of Rule 23, effective from 1st October 2023. Now this is going to be 90 days plus 180 days, which can be extended by commissioner or any officer authorized by him. So 90 plus 180 days as against 30 days. Hope I'm clear to this part. Please tell me Rule 23. Am I clear to all of you? Say yes in a chat box. All right, perfect. So you got it. Coming to the next change. Under section 37, we are filing GSTR1, outward supply, right? The change which was introduced in 2022 by Finance Act 2022 from 1st October 2022 was, unless you file your GSTR1 till a preceding tax period, you will not be able to file GSTR1 for the current tax period. We are in the month of October. Unless I file my GSTR1 till September, I will not be able to file GSTR1 for the current tax period October. And this change was brought from 1st October 2022. What is the change from this year? Effective from 1st October 2023, belated GSTR1 can't be filed after a period of 3 years. So time limit is now being prescribed 3 years for filing belated GSTR1 from the due date of furnishing such return. This may be extended, but as per recommendation of GST Council on the basis of notification issued for a specified class of person. But this is the provision under section 37. Come to section 39. Unless you file GSTR1 for the current tax period October, you will not be able to file GSTR3B for the month of October. And this change was brought by Finance Act 2022, effective from 1st October 2022. Last year change. What is the change now? Time limit prescribed 3 years for filing belated GSTR 3B from the due date of furnishing such GSTR 3B return. So time period for belated GSTR 3B, similar like GSTR 1. First, you tell me, yes, you got it. Then I will tell you what is the problem. One operational issue is involved in this case. First, you say yes in a chat box that you got it. You understood it. Now, what is the problem which I foresee? Whenever GST registration cancelled by the department, and if we have gone for appeal or gone for revocation application, and let's say that is being accepted, and accepted that on furnishing of my pending return, GSTR 1 or GSTR 3B. But just think a situation that if my cancellation, my registration got cancelled, which is being now revoked, or appeal is being allowed on furnishing of GSTR 1 or 3B. But if time period of 3 years is already expired, then what happened? How I would be able to file GSTR 1 and 3B? That may be one practical and operational issue, which is not being clarified. But this is what issue pertaining to belated return filing of 1 and 3B. Hope you got it. Am I clear? Hope you got it. Am I clear? Hope you got it. Perfect. Section 44, 9 and 9C. Again, time limit prescribed 3 years for belated annual return, including self-certified reconciliation statement. Section 52, GSTR 8, which e-commerce operator need to file for tax collected at source. Again, time period prescribed for belated GSTR 8 filing 3 years time period. So belated GSTR 1, 3B, annual return, and GSTR 8 time period is 3 years, unless otherwise permitted by way of notification. Hope this part is clear. Please tell me. Hope this part is clear. Say yes in a chat box that this part is clear. All right. Now, section 54 is a refund. Refund when we are filing refund under GST. You know, section 54, subsection 6. There's a provision that there would be 90% provisional refund. And there's one line added that this 90% provisional refund can be permitted with provisionally accepted ITC. Provisionally accepted ITC. But now there's no concept of provisionally accepted ITC. With the omission of all relevant provision pertaining to two-way communication from 1st October 2022. So they have deleted this term provisionally accepted ITC with self-assessed ITC under section 41 subsection 1 of CGST Act. Only this is the change under section 54 subsection 6. Come to section 56. 56 talks about interest for delayed refund. Let me ask one question to all of you. When you are filing refund application to get refund from the department on zero rated supply, how many of you has got the refund within time period 60 days? Can you say yes in a chat box? How many of you has got refund within 60 days? Say yes and no. I can just analyze where we are. How many of you have got? So a lot of yes and no, yes and no. What we have seen in the trade, department used to issue deficiency memo, and we used to file a fresh refund application. So calculation of the 60 days is very important. If department does not give the refund within 60 days, then they have to give me interest beyond 60 days. So if there is delay beyond 60 days, they are supposed to give me interest. First of all, we are not getting principal refund. And second, interest to be calculated after 60 days. But now for calculation, under section 56, they have made the change. They are saying that this delay, they are going to calculate in the manner with such condition and restriction as may be notified. So they are saying, Bimal, calculation of this delay, we will provide the manner to you, and we can put such restriction and condition for calculation of this delay on which you are claiming interest on delayed refund. So you can understand whether this provision, I'm asking you, do you think this provision is really ease of business? Yes or no? Yes or no? It is not ease of business. It is completely against. Completely against. Nevertheless, okay, come to section 62, base judgment order. You know, base judgment order can be passed by proper officer when you fail to file GSTR 3B or GSTR 10, which is final return. You fail to file, and base judgment order is being passed. Under section 62, there was provision. This deemed withdrawal of base judgment order within 30 days, which is now extended to 60 days. Good one, laudable one. Further, it can be extended by 60 days on payment of additional fees over and above standard late fees. So to that extent, changes is being introduced in section 62. Good one. Come to the next change. Now, next change is, okay, so I'm going one by one and telling you there are certain provisions pertaining to formation of GST tribunal. You all are aware of that government is now made specific section 149 to section 154 of Finance Act 2023 applicable. They are also, bringing many changes, and they want to see the formation of GST Appellate Tribunal, which is the need of the hour. Recently, in 52nd GST Council meeting held on 7th of October 2023, there is important recommendation coming. That important recommendation is that they are going to align appointment of President and members of GST Tribunal with Tribunal Reforms Act 2021. And what they have recommended, listen very carefully. They have recommended that any advocate having indirect tax experience of minimum 10 years in any tribunal, High Court or Supreme Court can be appointed as a judicial member. But the minimum age should be 50 years for appointment of president or members of GST tribunal. And maximum age to hold the tenure as a president would be 70 years, and for members it is 67 years. So GST Appellate Tribunal, our separate provision, already got notified from 1st August 2023, which you can check in section 149 to section 154 of Finance Act 2023. Now, next change. Section 122 1B. There will be penalty going to be levied on e-commerce operator. Now, e-commerce operator is being allowed that they can open their platform for supply of goods by unregistered person or composition dealer. So a lot of compliances need to be undertaken by e-commerce operator. Like in a composition dealer, we have seen that he is not allowed for interstate supply of goods or services. So e-commerce operator has to ensure that he is not permitting his platform for interstate supply of goods or services to any unregistered person. And this e-commerce operator is deducting TCS and correctly furnishing details in a GSTR 8. In case of failure to make the compliances, there would be penalty of 20,000 or the amount tax evaded, whichever is higher, going to be levied on e-commerce operator. Next change, an important one. Here I would like to draw your attention. Section 132. 132. Prosecution provision. Under section 132, there are 12 offenses specified for launching prosecution provision. Now, 3 offenses out of 12 offenses are decriminalized. So department cannot invoke prosecution provision against these 3 specified decriminalized offenses. What are those? 132 subsection 1 clause G, J and K, which is like when you're preventing any GST officers for performing the duties, or you are tampering the evidence or details, or you are failed to supply information or providing false information. These 3 offenses are being decriminalized. So no prosecution provision. Good one. Second change. Threshold amount for launching prosecution provision is being increased from 1 crore to 2 crore. 1 crore to 2 crore. It is a tax amount. 1 crore to 2 crore. Except a specified offense under section 132 subsection 1 clause B, which is issuance of invoice without supply of goods or services or both, which is fake invoice. So for fake invoice, threshold would be 1 crore. Otherwise, threshold increased to 2 crore for launching prosecution provision. This is the 2 change under section 132, and you must be recalling that there are specified non-bailable offenses if threshold amount of tax is more than 5 crore. What are those 4 specified offenses? Supply of goods or services without invoice, issuance of invoice without supply of goods or services, you're availing credit on such fake invoices, or GST collected but you fails to pay within a period of 3 months. So amount of tax evaded is more than 5 crore, then it's a non-bailable offense. Less than 5 crore, 2 to 5 crore is a bailable offense. And there was another category, 1 to 2 crore. Now, to that extent, there would be change because threshold now being increased from 1 crore to 2 crore. Except fake invoices. Hope this part is clear. Can I see yes in a chat box that this part is clear? Say yes in a chat box that this part is clear. Coming to the next change, compounding of offenses. Section 138. Compounding of offenses is permitted in GST law. Now, compounding need not required for the offenses decriminalized. 132 subsection 1 clause G, J, K decriminalized. No compounding required. For fake invoice, no compounding. You can't go for compounding for fake invoice, 132 subsection 1 clause B. Otherwise, now compounding threshold is being liberalized. Earlier, it was 50% to 150% of tax amount, which is now going to be 25% to 100%. And Rule 162 also got notified for calculation of compounding amount effective from 1st October 2023. Am I clear to all? Say yes that you got it. This compounding of offenses. Say yes in a chat box that this part is clear. Perfect. All right. Thank you very much. Now coming back to another important provision. Section 158A. Very recently, we heard that GSTN portal can share the data under PMLA, Prevention of Money Laundering Act. You must be knowing that for ED offenses. And we were having fear around whether GSTN portal can really share the data with other systems notified by the Government of India. Yes, it is being permitted. Section 158A, which is consent-based. They will take your consent. And whatever particulars you have filed at the time of registration, e-invoice generated, e-way bill generated, GSTR1 is being filed, 3B is being filed, annual return is being filed, such data can be shared with other system as notified by the government. And it is consent based. And that is what the new section which has got notified from 1st October 2023. And you can't demand any kind of penalty, any kind of, damages on that account. Having said, I've done all the important provision pertaining to CGST Act. Now I'm talking about change in IGST Act, important changes in IGST Act. Let me take up those changes now. Okay. Under IGST Act, let's start very first. Section 12, subsection 8 of IGST Act. Read with section 13, subsection 9 of IGST Act. And what is this? Listen very carefully. We all know from 1st October 2022, sunset clause for the exemption on ocean freight is being done away from 1st October 2022. You must be recalling that, right? So GST levied 5% on ocean freight. Under section 12, subsection 8, where supplier and recipient of service located in India, place of supply was destination of goods as per the proviso. Destination of goods. To understand in a better way, let's take an example. Let's say I'm a freight forwarder in Delhi, and you are my company recipient in Delhi. I'm undertaking transportation of goods destination to Germany. So as per section 12, subsection 8, because we both are located in India, place of supply is a destination of goods, Germany. So when I'm going to raise the invoice to you, to my company registered in Delhi, same state, what I'm going to charge? I'm going to charge IGST. But you are registered in Delhi. If I'm charging IGST and mentioning other territory, there was dispute of availing credit. You must be recalling that this dispute was there initially in the beginning. We got circular clarifying position, no, you will get the credit. But now what they have done, they have omitted the proviso pertaining to destination of goods. They have omitted. Now the provision is supply of services of transportation of goods, including mail or courier. Place of supply for B2B supply, registered supplier to registered recipient. Place of supply would be location of recipient. So in this case, even though goods are destined Germany, but I will charge CGST and SGST, and you can avail credit if it is related to taxable supplies. So that dispute of, IGST charge, how to avail credit is being done away. And in case of B2C, place of supply would be the place where goods are handed over for further transportation. That is how the change brought in 12 subsection 8 of IGST Act. Please tell me, have you got it? Say yes in a chat box that it is clear to all. Say yes in a chat box that this part is clear to all. Perfect, perfect. Section 13, subsection 9. Section 13, subsection 9 of IGST Act. Where supplier of service or recipient is located outside India. What is section 13, subsection 9 is saying? Transportation of goods, excluding mail or courier. Place of supply would be destination of goods, destination of goods. They have omitted this section 13, subsection 9, effective from 1st October 2023. So what will happen now? So we can take an example, and so that we can understand this transaction. Let's say I'm a freight forwarder in Delhi. I'm undertaking transportation of goods to Germany for my client located in Germany. Client located in Germany. Am I right? Or you can say if client is located in India, you can always say that. So reference is coming out supplier or recipient located outside India, one party. So now it is very simple. You have to go to the default rule. Default rule is section 13, subsection 2. So place of supply would be location of recipient, location of recipient. So if I'm undertaking supply of goods to Germany for recipient outside India, then place of supply is outside India. If address for my recipient is not available in the books of supplier, then the location of supplier, which is the default section, section 13, subsection 2, need to be followed from 1st October 2023. Please tell me, am I clear? Am I clear? Say yes in a chat box that this part is again clear to all of you. So a lot of yes coming, and I will undertake your question. Believe me, if you're having some question, we will do open house also. But after the end of my presentation. So you have to continue with me. Once I'm through, I will take your questions. So just pause, keep your question parked. I will take up those questions. Now, there was one specific section, section 123 of Finance Act 2021. 2021 got notified from 1st October 2023. Wake up call. Listen, I need your attention now. I need attention for 5-10 minutes so that you can understand this provision well, clearly. See, there are two zero-rated supply, two transactions. One is export of goods or services and supply of goods or services to SEZ unit or developer, as per section 16, subsection 1 of IGST Act, which we all are aware of. What is the change? As per this section 123 of Finance Act 2021 got notified from 1st October 2023. Whenever you're supplying goods or services to SEZ unit or developer, it must be for authorized operation. Please, authorized operation. For understanding authorized operation, whenever you are supplying goods to SEZ unit or developer under LUT model, LUT or bond, Rule 89 is already having a reference of endorsement on documentation by jurisdictional officer of SEZ unit or developer. That is called that he's endorsing the document that these goods are being received for authorized operation. Rule 89 is having the reference. But now this got notified. And it's got notified only from 1st October 2023. Point number one. Prior to 1st October 2023, rule was there, but there was no corresponding provision. Now provision is being notified, so providing power to the rule made. But for the past period, we can always litigate and defend. There was no provision for authorized operation. Please tell me this part is clear. Please tell me this part is clear to all of you. This part is clear to all of you. Perfect, perfect, perfect. Thank you very much. Thank you very much. Next important one. Next important. What is authorized operation? Barun, simple. That SEZ unit is procuring such goods or services for their authorized operation. Means they are being authorized for certain operation, Barun. And how it is going to be? Because that designated SEZ officer will endorse the document that whatever you're procuring goods, that is for authorized operation. Now the challenge is for services. I'm asking one question to all of you. Do we have any list of services? Mean that we can say it is for authorized operation. Say yes and no in a chat box. Do we have any list? Say yes and no. I want to see that in a chat box. And today I'm going to give you one thing, very important one. There is one list which is called Uniform List of Services. Notification number you can note down. D12/19 dated 2nd January 2018. 2nd January 2018. Under SEZ Act, there's a list provided, uniform lists of service provided containing 66 services, which is being considered for authorized operation. If your services are even over and above 66 services, then you must ensure that these services are being endorsed by designated SEZ officer for authorized operation of SEZ unit or developer, so that tomorrow it is not being disputed. And from 1st October 2023, you should be careful about. So Mr. Ganeshan, it is notification number D12/19 dated 2nd January 2018. Hope I'm clear to all. Clear to all. Say yes at least in a chat box. Say yes in a chat box. This part is clear? Okay. Now the important one. Now the important one. Listen very carefully. Whenever we are undertaking zero-rated supply, there are two modes available, right? One is refund of ITC on input and input services under LUT or bond, option one, or charging IGST on my zero-rated supply and claiming refund of IGST. These two options. There is a change in section 16, subsection 3 and subsection 4 of IGST Act, but effective from 1st October 2023. And listen carefully, what is the change? When you're exporting goods on payment of IGST, you're aware of. Rule 96 was already notified from 23rd March 2020, wherein there was condition that you must receive the exports proceeds within a time period specified under FEMA, which is 9 months. So if you have exported on payment of IGST, as per Rule 96B, effective from 23rd March 2020, you must receive the exports proceeds within the time period 9 months under FEMA. If not done, if you have taken refund, this need to be deposited back within 30 days from the expiry of this time period specified, along with interest, Rule 96B. But my humble submission is, this rule was beyond the power from the Parent Act. Section 16, subsection 3 is now permitting. Now it is permitting. Now it is saying that from 1st October 2023, this rule is getting backing now. So I can always say from 1st October 2023, you need to follow Rule 96B. But prior to that, we can litigate the matter. Please say yes in a chat box that this part is again clear to all of you. Say yes in a chat box that this part is clear. All right. Many of you are saying yes. I'm not finding single no in chat box, meaning thereby that you all are understanding, and my chat box is open to everyone. So you must cherish that whatever we are discussing today, we are understanding. And that is really sabka saath, sabka vikas. Next change, section 16, subsection 4. Section 16, subsection 4 is saying now government can notify any class of person or class of goods or services which cannot be exported on IGST. Which cannot be exported on IGST. And thereby, notification number 1/2023 integrated tax dated 31st July 2023 got notified that certain goods which cannot be exported on payment of IGST, meaning thereby such goods should be exported only under LUT model. And these goods are being specified in notification number 1/2023 integrated tax. What are those goods? Pan masala, tobacco, cigarette, and gutka, majorly. You can check this 1/2023 with the corresponding HSN given for the goods cannot be exported on payment of IGST. It has to be under LUT model only. Hope this part is clear. So Barun is asking why this change. I will tell you a little later, but am I clear to all of you? Am I clear to all of you? Say yes in a chat box so that we get a clarity. Why this change is being brought for the information? Because in IGST model, we are getting refund of input services and capital goods, all three items. And you would be preferring IGST model, right? Because that is very convenient model. On the basis of shipping bill, you get the refund when you're disclosing the transaction in GSTR1. But government has seen many cases of fake input tax credit availed and utilized for payment of IGST. So they are identifying that risk-prone product class of goods where they are finding that these should not be open with simple shipping bill criteria, IGST criteria. It should be under LUT model to create detention, meaning thereby some corrective measures, control and check measure. That is how notification number 1/2023 talking about tobacco, pan masala, and gutka. Hope I'm clear. I explained to this particular question raised by Barun, but I've explained to all of you. Am I clear to all of you? Can I see yes? All right. Very recently, in 52nd GST Council meeting, GST Council has recommended that even supply of goods or services to SEZ unit or developer will be permitted on IGST. No problem. You supply goods and services to SEZ unit or developer on IGST, no problem, and claim refund, but subject to that notification number 1/2023 integrated tax. So no export or no supply of rather tobacco, pan masala, cigarette, etc. So this is the recommendation. Hope this amendment will be done accordingly. So this is pertaining to export related. I'm through with the IGST except last change. Definition of non-taxable online recipient, which includes unregistered person, and OIDAR, Online Information Database Access Retrieval Service, is widening the tax base now. So if any OIDAR services provided from a non-taxable territory, foreign service provider, to unregistered person, non-taxable online recipient, IGST leviable, and such foreign service provider need to take registration in India and pay the GST and make the compliances. So definition of non-taxable online recipient with OIDAR is being amended accordingly. Last component of today's discussion, and then I will ask my friend from Joho Books to give you 5 to 7 minute quick snapshot of Joho Books, how it is easier helping you guys to make GST compliances, and that too with automation, automated through electronic route. Last component, let me explain and then we will proceed. You must be knowing that 50th and 51st GST Council recommendation for GST levy on online gaming, horse race and casino at the rate of 28%. Now with the Finance Act, Amendment Act rather 2023, CGST Act 2017 got amended for introduction of GST to be levied on online gaming, horse race and casino. What are the important changes is being done? I'm just highlighting within 2-3 minutes so that you can digest those pointers. First change they have made in Schedule 3, Para 6. Actionable claim other than specified actionable claim. So actionable claim per se, neither a supply of goods nor supply of services, Schedule 3 transaction, except specified actionable claim. So what is specified actionable claim? 6 transaction: gambling, betting, lottery, which was there. Now they have included horse race, casino, and online money gaming. Online money gaming. So hope this part is again clear to all of you. They have included. Now they are saying they are going to levy GST on this 6 specified actionable claim. Good evening, Mr. Ramesh. You can unmute yourself, Mr. Ramesh.
Good evening, Bimal Ji. Yes, sure.
Yeah, just give me a few minutes. I'm supposed to finish my presentation and then I will invite you for your presentation. And
Definitely.
then we will start with the open house question answer.
Sure.
Okay. Now, listen very carefully. It is very important. So what is the definition of online gaming? So they have given the definition under section 2 subsection 80A of CGST Act. Online gaming means some gaming which is provided through internet or through internet network, and that includes online money gaming. So online gaming includes online money gaming. And what is online money gaming? Online money gaming means online gaming where the player pays or deposit money or money's worth, including virtual digital asset. So all crypto, Bitcoin are being included in the definition, online money gaming. And definition of virtual digital asset as given under section 2 subsection 47A of IT Act 1961, Income Tax Act 1961 is being adopted. So they are saying now online money gaming is now going to be leviable to GST, which also include virtual digital asset. They have given valuation, specific valuation provision. Rule 31B for online gaming, including online money gaming. And what they have said, that any amount paid or payable or deposited in money or money's worth, including virtual digital asset by players to the supplier of that platform, on that value that GST is going to be levied. And there will not be any deduction on account of any money returned or refunded. So whatever you pay, deposit, money or money's worth, including virtual digital asset. Even for casino, they have said any amount paid or deposited to buy token chips, whatever, when you go to a casino, on that amount itself, GST going to be levied, and no deduction for any amount return or refund, nothing. 28% GST going to be levied, and changes are being brought in notification number 1/2017 goods rate notification. So whatever we are discussing, this online gaming, irrespective of game of chance or skill, it is effective from 1st October 2023. 28% GST leviable to done away with game of chance versus skill. So what happened? Fate of Karnataka High Court judgment, Gamescraft, 21,000 crore rupees, which was set aside Honorable Karnataka High Court, because they have said game of skill cannot be adjudged, cannot be discussed at par with the betting, gambling, or lottery. But now henceforth from 1st October 2023, irrespective of fact, game of chance or skill, online gaming, including online money gaming with definition virtual digital asset, 28% GST. So any foreign service provider from non-taxable territory need to take registration in GST and charge GST whenever it is being provided to non-taxable online recipient, unregistered person. And this is what government intention all about. So there's a brief provision pertaining to online gaming, horse race, and casino. I have given all the changes which is effective from 1st October 2023. There are certain more, but maybe 10 minutes. I want each one of you to see how Joho Books is making our life easy in terms of providing that digital platform, automation, where you can follow your accounting, audit trail, and then GST compliances. I request Mr. Ramesh to start his presentation, and then we will start with the question answer session. Mr. Ramesh.
Yes, Bimal ji. Yes. No. So can you enable myself to share my screen, Bimal ji, if you don't mind?
Just give me a minute. I will enable you. Just a minute. It is. No. Just allow me. I'm just seeing how to get it done.
Sure.
Just. See, now it is available to you.
Okay. Yes. Okay. So, very good evening, ladies and gentlemen. It's a pleasure having all of you with us today, and thanks for joining. And I hope we are at the last phase of today's session. And the good news is I'm not going to take much of your time. So if you see, my agenda is going to be very simple. So this is myself, Ramiz, and I head the training and capability wing of Zoho Finance suite of products. So we are going to have a look at how we are going to enable GST settings in Zoho Books. That would be the first part, followed by how to file GST returns from Zoho Books with creation of e-way bills as well as your e-invoicing. So with that, we'll be done. So let's get started with the first one, that is how to enable GST settings in Zoho Books. So as you can see, this is the screen of Zoho Books, the interface of Zoho Books, which is an holistic accounting solution. So you go to settings, and where you will have an option called as tax and compliances. You click on taxes, where you will be in a position to configure GSTNs, multiple GSTNs, configuring your GSTN number. It automatically pops up your business legal name, the trade name, the GST registered on date. You can configure it over here. And in case if you would like to include reverse charge in your sales transactions, you can check this particular option, including the import and export options that is available. Once you configure this particular information and click on save, the GST settings gets enabled in your accounting system. As a result of which, all the tax rates related to GST will get automatically populated. However, you always have options to create new taxes in case if it is required. In the GST edition of Zoho Books, it is not at all required, because whatever the tax rates are, it gets automatically populated, which could be allocated to your items as well as your contacts. So whenever you configure the items that you purchase or sell, you will have to just configure the tax preferences of these items. And once this is done, whenever you configure your contacts, be it your customers or your vendors, you always have the option to configure their GST treatment, whether they are GST registered or unregistered under composition, whether they are customers or overseas customers. So based on that, the tax preferences will be automatically populated in all your transactions. As you are able to see on my screen, this is nothing but the tax invoice that has got created the moment you choose the item as well as the contact. So based on the tax preference that you have configured, the tax calculations will be automatically done. So why do we do this? Is just to enable a hassle-free GST filing process to you. So you go to GST filings. Once you have created all your transactions, you will be able to choose the appropriate GSTN for which you're going to file your GST, and click on view summary and choose the appropriate period for which you're going to file your GST. Let's say this GSTR1. So you have all transactions. You click on that, you will be able to see the format with all your total transaction, the taxable amount, IGST, CGST, SGST, and cess bifurcations for all your B2B or B2C large invoices, export invoices, B2C small invoices. So this bifurcation will be readily available for you, the GST format. So once this is ready, you can just go to push to GSTN, which will give you the summary of the total transaction, which we just saw, including the HSN summary, which you are able to see it here, the nil rated summary, the B2CS, as well as the document issued. You always have the option to edit the document issued section to enter the serial number from and serial number to, including the total number and the total cancelled. And with this, you'll be able to push this particular data to the GST portal and also file your returns directly from within Zoho Books, generating just the OTP from here. So this is how you handle the GST1 from Zoho Books. Coming to the GST2, I would like to touch upon the 2A part. So you go to all transactions for that particular period, and you can see there is a tab which generally populates your overall summary However, you have the reconciliations tab over here. The point to be noted here is, in the previous point, we just saw there was an option to push to GSTN, whereas in 2, you can see there's a button called as pull from GSTN. So you just click this option and give the OTP so that the data from the GST portal gets automatically categorized under 4 segments, namely missing in GSTN, missing in Zoho Books, partially matched, unmatched. So missing in GSTN, you can see you have 2 layers of data everywhere. The first layer pertains to the data that is belonging to your accounting system, and the second data is the data that has been fetched from GST portal. So what you do is, if it is missing in GSTN, you can see that the first layer has data, which means you have the data in your accounting system, whereas nobody has filed it, so that the second layer is empty for every transaction you see here. So that is missing in GSTN. You can choose the action whether to add it to the GSTN or not. Similarly, missing in Zoho Books, if you click that, you will have the second layer filled, whereas the first layer will be empty, and partially matched. Both the layers will have the data, whereas with slight matches in the figures, be it in your accounting system or from the data that has been fetched from the portal. And matched will have the right or the perfectly matched data, be it your accounting system or whatever the data that has been fetched from the GST portal. So you can perform the appropriate actions and you complete your return. The same applies to your GST R2B as well. Coming to the GST R3B part, you have the summary which is readily available. You can just view the summary, which allows you to have the appropriate format readily available, including the nature of supply. You can see the 3.11 details, 3.2 of supply shown in 3.A above, of intrastate supplies made to unregistered person, composition, taxable persons, and UIN holders. You always have the eligible ITC column where you can adjust your ITC, and ITC reverse also could be edited from here. So this data which has been available, you can always click on push to GSTN in order to push this data, and whatever the payment that has been done, you'll be in a position to record it, whatever the challan that has been generated and paid. So that could be posted as a payment made. So you can record the payment, giving the payment date, what was the paid through account, and including the tax liability like CGST, IGST, cess, and SGST. So you can post appropriate figures and record the payment to record the payment that you have made for your GST R3B. And even the filing could be done using the particular option. And coming to the annual returns tab, which is your GST R9, you click this view auto-calculated summary, which will give you a clear-cut format of the 9 summary. So you have 2 options here: view return, fetch and update. View return is nothing but your annual return based on your accounting system or your accounting data. And fetch and update is nothing but which has been fetched from the portal. So wherever there is a mismatch between your accounting system and the GST data, you will be able to see this orange color exclamatory mark, and you can use the edit option in case you wanted to edit it with regards to your accounting system or the GST data. Once you have configured that, you can always regenerate the return, which will henceforth match the data, both of your data from your accounting system and the GST, and after which you will be having the option to push your returns to the GSTN and also file the returns of GST R9. So this is how you handle the GST part with regards to Zoho Books. Now coming to e-way bills and e-invoicing. So if you're talking about e-way bills, you will have to enable the e-way bill settings. That is, you have under settings, you have tax and compliance, where you have this e-way bills. You can see I have configured multiple GSTNs for e-way bills. So you can just click on connect now to configure your e-way bill credentials. That is, you just post your username and the password of the e-way bill portal, and you click on save and validate so that your accounting system and the e-way bill portal gets integrated. As a result of which, you will be able to go back and you can start posting your or start creating your e-way bills. That is, you go to your invoice. I'm just choosing a random invoice now. Let's say this is the invoice. You can see on the top, you can click on add e-waybill details. It gives you an option whether you want to create a new e-waybill or associate a e-waybill number which has already been generated. So in my case, I want to create a new e-waybill. So I click that. So most of the data which has already been selected from the appropriate invoice would get automatically populated here. You will have to just configure the rest of details, that is your part B, like your vehicle type, your vehicle number, the document, transported document number, and the date, the transported document date. You always have the provisions to manage your transporters here, where you can use to add new transporter with their name and the transporter ID so that it gets saved for your future references. So once you give the part A and part B details, you can click on save and generate so that the e-way bill gets generated from Zoho Books. And this would get reflected in your e-way bill portal as well. So this is how you configure e-way bill and create e-way bills from Zoho Books. And the last part is about e-invoicing. So again, you come to settings where you can see e-invoicing as an option under tax and compliance. So click on e-invoicing and you can see that I have configured multiple GSTNs with the IRP. So likewise, for whatever the GSTN numbers that you would like to integrate your IRP, you will have to just click on connect now and give your username and password, which is nothing but your IRP credentials. Here, you can either give your IRP credentials or you can also give the e-way bill credential. Either way, it works. And you just click on save and validate so that your accounting system and the IRP gets connected. So as soon as this integration is done, like how we saw in the previous case of e-way bills, you go to your invoices. Let's say if this is the invoice, and I would like to clone this in the interest of time. So you just give the customer name, the place of supply, the invoice number gets automatically generated. You can configure the other details like your salesperson or your e-commerce operator, anything, and your item details. Once it has been given, you can see that all the other details have been calculated. You save it as draft. So now the invoice has been created. Now you can see the status of this particular invoice is in draft status and the icon is in orange color, which shows which is yet to be pushed to the IRP. So now this is the tax invoice that I have, which I'm showing it to you on the screen. So what I do is I just click on push to IRP. So since I have integrated it, I will have the option to push only my invoice details or push both invoice and e-way bill details. So I just choose the option to push my invoice details. Transaction has been pushed to the IRP and IRN has been generated successfully. Now you can see I have successfully generated the IRN as well as the QR code. You always have the provisions to cancel the e-invoice directly from here. And just after pushing it to the IRP, you always have the option to send the invoice to the appropriate customer to whomever you have raised the invoice. So this is how you create or configure e-invoicing facilities in Zoho Books. And right by having a glance at the color of the icon, you can see earlier it was in orange color. Now it has been converted into green color. The orange shows it is yet to be pushed. The red shows it is failed because you would have missed some data or there should be some confusions. Or if it is green, which means it has been successfully pushed. So this will automatically help you in identifying what is the status of the appropriate invoices that you have raised. So this is generally how you raise and identify invoices. You always have the options to bulk push the e-invoices to the IRP portal as well. So these are the things that we would like to highlight. And since Bimalji just touched upon the audit trail, you always have the audit trail report readily available. It is not just today or yesterday that we have come up with audit trail. Right from the day one, we have been including, even before it has been mandated, we have been incorporating audit trail in all our systems, in all our editions. So you have the activity log in audit trail, which will show you the history of whatever the actions that has been performed in your system. And in case if you would like to have the audit trail viewed for any of your invoices, you can see here. So there is a version 1.0, 2.0 and 3.0 for each and every invoice or the actions that has been performed. So this is the invoice which has been seen for version 1. If I want to compare how the version 1 was till the version 3, I just choose to compare and just choose from 1 to 3 whatever the modifications that has been done. Even if it has 28 or 30 modifications, you will have 1.0 to 30.0. So whatever changes that has been made, it will be tracked perfectly, and clicking on compare will allow you to have a deeper comparison as to what has been changed. So whatever will be shown in yellow color will be the ones which has been modified. Whatever things are shown in pink color will be the ones that has been removed, and whatever the things that are shown in green color are those which has been added newly. So this is how you use audit trail as a functionality in Zoho Books. So on the compliance front, we have made it or made Zoho Books on auto compliance mode so that you need not worry about your compliance. And that's the reason why we ask you to handle or put your compliance on autopilot mode when you're using Zoho Books. If you're not compliant, the system will restrict you from even creating the transactions. So just to have a recap, we just saw how to enable GST settings in Zoho Books, how we configured the tax rates for your items and the tax preference for your contacts, based on which how easily we created transactions, and with the result of which we filed the GST filing. And we also saw how to raise e-way bills, including how to configure the accounting system with the e-way bill portal. And the same applies to e-invoicing, how to configure your accounting system or integrate your accounting system with the IRP portal and then raise the e-invoicing facilities. So with that, I'm done with my session. And for any questions related to Zoho Books or something, you can always feel free to contact our support.india@zohocorp.com. Thank you so much for all your patience.
So we are through. Thank you, Mr. Ramesh, for making a very short, crisp, but important presentation that what Zoho Books can provide each of business in terms of automation and digitization, starting from accounting, auditing, and then compliances in GST. I see that there's someone asking what is the pricing for CA firm. So you can answer to him that what is the pricing, what is the MOU with ICAI?
Definitely. As Bimalji rightly quoted, I wanted to start from the scratch. That is, if you're talking about the pricing, we do have generous free plans. That is, if your client's turnover is less than 25 lakhs, the product by default comes free of cost. I know most of your clients would be above that. So when your client is below 1.5 crore of turnover and they are GST registered, even for them, the product comes free of cost, for which you will have to sign up for the product from the GST portal. Apart from that, in case if you have clients above that, we have multiple plans in which we have suited. I know that's not the question that has been raised because you asked it for the CA firm. For CA firms, we have signed an MOU with ICAI, with which we are planning to give the product which is worth 3 lakhs, a unique edition that we have created, which is inclusive of Zoho Books, Zoho Expense, Payroll, and Inventory as well, which is a unique plan which is curated only for the CAs, and we offer it free of cost for each and every MRN for 3 years. So I think you can leverage that in order to do a parallel and free for your CA firm. And we are also parallelly running our consulting partnership program, for which you can also partner with us or enroll with us in order to work hand to hand with us. So I think in that case, you can always contact us for that, and we'll be in a better position to help you out.
Thank you. Thank you very much. So maybe we can start, taking up some questions, and then we will sum up today's webinar. So you can post your query in the chat box. I will definitely try to answer. There's some Pranal saying 13 subsection 9 of IGST Act is omitted. So place of supply for transportation of goods would be covered by 13.2. 13.2, that is what my answer. 13.3, where physical goods are required to perform the services. Yes, I do agree, but by default, when you look at export and import, that is how you have to term it accordingly. But for export, when you are, your goods are really going out of India to Germany, let's say, and a recipient is outside India, so place of supply by 13.2, just a portion which is being picked up from India to Germany cannot be 13.3 application. That would be my answer to you. So Pranal, hope you got my answer, how I'm differentiating and distinguishing, right? All right. So next question by Mr. Gothan. If a person failed to return previous month, he can't file GSTR for current month. Is it now changed for 2-3 years or 1 month to 3 years? See what happened, Gothan. The current application which I refer, like for section 37, unless you file your GSTR1 for September, you will not be able to file for October. This is what presently made applicable on GSTN portal. Now, belated return. There may be a case, lot many belated return for GSTR1, 3B, 9, GSTR8. So government is now made provision applicable. 3 years time limit is being prescribed. So maybe this enablement on portal would be done with a limitation of 3 years. So that you have to check on GST and common portal, but time limit which is being prescribed 3 years for belated GSTR1, 3B, 99C and GSTR8. Hope this part is clear to you, Mr. Gothan. Okay. Ashish is saying and asking, after Supreme Court judgment Mohit mineral case, we stopped paying RCM on ocean freight from May 2022. Now, the government has issued an exemption notification from October 1, 2023. There's all confusion going on in the market. I do not know for what region, Ashish. Very simple. What was Mohit mineral case? On CIF, you are already paying custom duty, including IGST. So on freight portion, you have already paid IGST component. So what was Mohit mineral case? That once in case of CIF import, basic custom duty and IGST is being paid, then the department cannot demand IGST separately on freight portion. To my mind, that is what the meaning coming out. And to that extent, they wanted to, but they have delayed the process. This is what I looks like. For FOB, free on board, please try to understand. The implication was there before and will continue to be. This is what my answer to you. Ashish, hope I'm clear to you. Okay. So there's some Bikas income received from YouTube USA on account of uploading videos whether qualify for export of services. Because quite simple, for export of services, what condition I need to satisfy? Supplier is in India, yes. Recipient outside India, USA. Place of supply is outside India. To my mind, it is outside India. Looking at the place of supply, because ultimately these services are being provided to USA only. Now, maybe some of beneficiary watching such YouTube on in India does not mean that I'm providing services to those beneficiary in India. I'm being paid by USA in convertible foreign exchange, and we are not merely establishment of distinct person. To my mind, it is export of services, and we can say that export of services, though department is litigating this subject matter. Because hope I'm clear to you. Okay, there's some Kamal which he's talking about, sir, applicability of section 16 subsection 4 time limit for belated GSTR 3B. Kamal, very clear. Very clear. It is only for the filing GSTR 3B belated return which I have referred. By filing belated return does not mean that time limit get extended. Time limit will be looked at from 16 subsection 4 perspective. And that is what all judgment coming out recently, AP High Court in the case of Thiru Malakonda Plywood. It was March 2020 return filed on 27th November 2020. After that time limit, which is 20th October 2020. So if belated return is allowed to be filed with the late fees, does not exonerate time limit. So to my mind, you are not being relaxed. It is only for the filing purpose with the late fees, but time limit will be as usual as per section 16 subsection 4. Kamal, hope I'm clear to you. So you should not assume accordingly. So this is one. Then some Mihir, that export transaction has to be valued on FOB irrespective of the terms or transaction value. FOB is the more appropriate one, and that is what being considered while filing shipping bill also. So that is more advisable. Mihir, hope I'm clear. Can you say yes in chat box? Okay. Okay, I'm picking up some other questions like, some Bimal Jain is asking my queries pertaining to e-credit re-availment statement. Department is asking credit, which we have reversed in earlier return and unclaimed on 31/8/23. Then what about ITC pertaining to April 22, July 22, which is unclaimed on the date? I did not understand completely, Anuj, what you wanted to ask, but my only answer to you would be, we all know that from 1st August 2023, they have changed the disclosure furnishing of details in GSTR 3B. They wanted us to disclose the transaction for credit, which is reclaimed. You can reclaim in future to be mentioned in table 4B2 of GSTR 3B. So you have to do one reconciliation part, and with the reconciliation, you have to substantiate your position, even though that figure was not mentioned in the past. But if it is available to you to be reclaimed in future, you can create some reconciliation on cutoff date 1st August 2023. You can mention that figure. If that you missed it, again it is available to you to be shown in subsequent month return. But do it so that clarity emerges that this much amount which you have shown in table 4B2 to be reclaimed by you on satisfying the conditions. Anuj, hope I'm clear to you. Transaction can be Mihir, transaction can be CIF and FOR, but FOB. But my only point is that in case of CIF, we are already paying the custom duty, including IGST. Then IGST cannot be demanded on freight portion, but on FOB, freight need to be added, and that is what this all component which we are discussing in the context of Mohit Mineral case. Okay. Some I don't know, name is not clear, but scrutiny notice be uploaded in portal. If notice later is sent via registered email, will it equivalent to sending notice through portal? See, try to understand mode of service under section 169 is being prescribed. It can be in either mode. It can be through courier, registered post, speed post, through mail, uploading on portal, or even advertisement in a local newspaper. Many options are being given. Why you're disputing? So if you have got through a email, then it is as good as it properly served as per section 169 of CGST Act. Kindly check section 169. Satish, industry by majority followed the practice to avail only eligible ITC, which is required to be claimed in Capture 3B. But now ASMT 10 is being issued for not availing ITC, available and reverse ineligible. Department is asking to pay ineligible ITC along with interest. What to do? To my mind, why I will do that? If I have availed the portion which was available to me, the balance portion I have not availed. So where the question of, reversing that ineligible which I have not availed, it is just, they are creating litigation for, unwanted litigation. Satish ji, to my mind, there's nothing. You must reply back and litigate the matter. Satish ji, am I clear to you? Okay. So lot many questions are coming, in a context separately. I do not know. Okay. Mr. Gothan, I have already discussed the changes pertaining to freight forwarder with respect to section 12, subsection 8 and section 13, subsection 9 of IGST Act. There's someone, CA Abhishek, I can't understand who is he, but he's saying, sir, registered person is dealer of fertilizer. He received gold under scheme from company. Company has deducted TDS 194R. Also received foreign trip from the company. Company has deducted TDS 194R. Both transactions are considered as income under income tax. Whether same becomes supply under GST, that is what the implication all coming out. See, if any GST credit is being availed on such item, department may allege it is the item of 17 subsection 5 clause H. That is goods lost, stolen, destroyed, written off, or disposed of by way of gift or free sample. Please, department is disputing, but my humble submission that it is in the course of furtherance of business and credit would be available. That is my answer to you. Abhishek, whether with export duty imposed on rice and other products, can exporter make export with payment of IGST? No way. You can't do that, Abhishek. Chargeability of professional charges received by director in the individual capacity under RCM. If it is individual capacity, not in the capacity of director, then no RCM applicable, Naveen. Nevertheless, lot many questions coming in a chat box. I'm trying my best. We are 9:20 now. Okay. Rishikesh, sell transaction made in 22-23, credit note raised in September 23 against invoice, same credit note uploaded in 1 but not reported in 3B due to negative figure because it is not taking negative figure. And there are no sale in September. What is the time period for availment of this credit note GST amount? Till the time you can utilize the same, but otherwise, if you are not in a position to utilize the same, you must intimate to the authority by way of letter and raise the tickets so that tomorrow, if any dispute arises, you can raise the point and say you are bona fide. So limitation points should not come back. When we look at that limitation of issuance of credit note pertaining to GSTR 3B disclosure. Of course, Himan's time limit for issuing credit note under GST is being prescribed 30th November. Earlier, it was September of next financial year following the end of relevant financial year. It is now 30th November. when credit note is being issued under GST, but there's the alternative model of financial credit note, wherein no GST charge with no time limit application. So lot many queries, okay. I can't be in a position, Ravi Chandra, specific notification related bill with 5% GST to ISRO for supply product for launch vehicle purpose. Please clarify to me. Certain questions are so incomplete, I can't understand the factual position, but whatever I could understand, I'm replying and trying my best. Sanjeev. Okay. So maybe last question. There are a lot many questions I'm finding in chat box. I'm trying to see that which question is more, appropriate where I can give the reply. I'm trying my best. Last question I'm picking up. So there's one guy saying Porous GST paid on secondment under RCM related to 17-18 on self-invoice. Avail the credit in 23-24. Its credit be challenged due to limitation. To my mind, when RCM under self-invoice in current year dated, then credit is available, no problem. Maybe only penalty under section 125, which is maximum 50,000, but credit can't be disputed whenever we talk about RCM from unregistered supplier. That is my answer. Savita, simple. When GST is being charged in a credit note, then GST adjustment required. If GST not charged in a credit note, then that is called financial credit note. Meaning thereby, neither supplier taking adjustment of GST on that credit note nor recipient need to reverse the credit pertaining to that GST on credit note, because GST not being charged, which is commercial or financial credit note, Savita. Okay, it's 9:25. It's almost more than 2 hours. Kindly allow me, by oversight excess ITC claim, how to resolve. If you have excess availed, then you must reverse. That is the only answer. If you have not utilized, no interest leviable, and you can always, write back to the authority, this was excess availed. All right. Thank you very much. Last question of Mr. Suryam I can take. So can issue on matter not raised in ADT 02 be included in 73 or 74 by the department? This is the very subjective issue. During audit, if they have not picked up any subject matter, which is the item they are picking up separately, and this can be debated, that during audit, maximum defense, Suryam, you can have that extended period can't be invoked once ADT 02 is being issued. But if it is a separate line item for which you also agree that this was left out during the audit time period, may become litigation point. But invocation of extended period of limitation can be debated, that after ADT 02, you can't invoke extended period of limitation for 74. But 73 case can be definitely made out. That would be my humble submission, Suryam. Okay, so allow me now to say sum up, because 9:30, almost 2 hours. So maybe some few questions to all of you. We did this webinar just to highlight important changes, which is made effective from 1st October 2023. And yesterday we have uploaded one video, which is on 52nd GST Council meeting recommendation. I'm sure that you all are on our YouTube channel. A lot of videos we keep on uploading. So subscribe to our YouTube channel and see all those videos, whatever we are trying our best to make GST good and simple tax. Of course, we both are trying. You are trying your best. I'm trying from my side. And with this process, we are helping each other. Stay tuned. In case you're having any suggestion, feedback, you can always write back to me. And I would be delighted to get your feedback and suggestion. Take care of yourself. And I wish each one of you a great career, great period, successful career, and do handle GST in the bestest possible way. My best wishes to each one of you. Thank you very much, and hope you must have liked today's webinar also. Thank you very much.